Hello and namaskar viewers, I am Sanjeev Pandya welcoming you to this week's edition of the Tax Talk with Ajay Kumar of SAI CPA Services. The show is brought to you by SAI CPA Services, a full-fledged, complete professional accounting firm located multiple locations in the state of New Jersey, and they can assist you with your personal taxes or even corporate taxes. If you have a small to mid-sized to large-sized business, they can help you out with corporate taxes as well. And that's a SAI CPA Services. They believe doing taxes right. They can be reached at 908-380-6876 or visit their website saicpaservices.com. Every week we bring you this show with the expertise of Mr. Ajay Kumar of SAI CPA Services. He guides us and he advises us on all the tax related matters. So with that note, I'd like to welcome Mr. Ajay Kumar. So good to have you in the show.
Thank you, Sanjeevji. Thank you for the kind introduction.
You're very welcome. So now we are almost at the end of March, and now corporate filing is done March 15th. Whoever didn't want to file the entire return, their extensions are done. And now focus is on the personal tax returns that's due on April 15th, correct? So now here I'm leading this conversation into the topic of the show is that, okay, a lot of people do wait till last minute to file their taxes because they are thinking, oh, if I have to pay to IRS, why would I file early? And some people just wait and wait, even if they are getting refund, they wait till April 15 to have their taxes filed. Whatever it is, it's your prerogative. But today we're going to find out from Mr. Ajay Kumar, are there any benefits of filing taxes soon as possible? One may think, okay, we're filing taxes earlier, that's it. But there are benefits, and we're going to find out from Mr. Ajay, what are those benefits?
Absolutely, Sanjeevji. Thank you. I'll start by saying the corporate taxes, when we talk about S Corp, LLC, those tax deadline was March 15. If you have a large C corporation, not a flow-through entity for them, or if you have a proprietorship, single member LLC, for them, the tax deadline is still April 15th. So the April 15th deadline is for personal taxes 1040, C corporation 1120 filer, single member LLC, and for all sorts of contributions that you have, especially IRA contribution or 529 contributions, all those contribution deadline is also April 15th. So April 15th is a very, very important tax deadline that we'll see in a couple of weeks. We always advise, Sanjeevji, to file the taxes sooner than later. And we'll give you certain examples, we'll give you certain benefits, but at a high level. The idea is, if you owe money, when you file your taxes, you can always choose a future date for making that payment. Meaning, you can always choose to pay at the very last day, April 15th, to pay the taxes to the government. So just because you're filing now does not mean you have to pay now. If you're getting a refund, why not get it yesterday? Why not get it as soon as possible?
Sure.
So if you're getting a refund, try to get it ASAP. If you owe the money, you can always choose a future date. It's one last thing to worry about. And then there are a lot of other benefits if you choose to file it sooner.
Sure. So, check is in the mail or check is about to receive, a direct deposit about to receive in your in your bank account. That's what it matters. Okay, so these are the benefits. But what I need to know, what exactly considered as an early tax filing?
So it's a great question, Sanjeevji. So an early filer typically means people who are filing sooner than later. The government, IRS, decides a date every year. The date is towards the end of January. All the employers have till January 31st to give you your W-2. All the businesses have till January 31st to give you your 1099. All these banks have till January 31st to give you your 1099-R for dividend, for the interest, for all those tax documents. So depending on your tax situation, an early filer could be filing before the end of January. You don't really have to wait till April. But the ideal time is between 15th February and 15th March. By 15th February, you have collected all your W-2s, 1099, dividend, interest, all the documents. And then you have enough time to look at your last year's taxes to compare what changed to this year. You have enough time to go to the accountant. Accountant has enough time to put everything together, and then your refund comes sooner. Not many people file their taxes sooner. So when you have millions of people filing the taxes in the same week, everybody's refund will be delayed.
Yes.
Because the same system, same number of employees, IRS have to process 1 million as opposed to 100,000 in an earlier week. So if you're filing your taxes sooner, when there is no rush, the accountant can spend more time, you will have better quality return, your refund comparatively comes sooner because there is no processing delay in the early days of filing tax season. So since we are doing this shoot now, and it's already towards March, and try doing it sooner than later. Don't wait till the last day. Don't wait for the second week of April. Try doing it now in the first week of April so you get your refund sooner.
Okay, so now, let's say if somebody files taxes early versus someone files taxes late, and obviously, as you mentioned, IRS gets all this tax return. There is a huge influx of tax returns coming in, and their computer system is processing all the tax returns. And now my question to you is about the tax audit. Does it really make a difference somehow that if your tax return is filed earlier, then maybe the chances of that return getting audited less than filing late or something like that?
That fact comes from the statistics. A lot of people believe that filing sooner has lesser audit, but I believe it's only because when you're filing sooner, the accountant is spending more time, you are spending more time as opposed to trying to rush it in the last minute when you may miss a document, the accountant may miss a document,
Yes,
and that creates more missed situation,
Yes.
missed document, incorrect filing, attracting more audits as opposed to the timing of it. So even though if you look at the statistics, how many audits happen for the taxes that were filed sooner, and you will see, well, if you file sooner, less audit chances. But if you take a step back, it's only less audit chances because the accountant, everybody has invested enough time to get it done right, as opposed to doing it on April 14th, April 15th,
Correct.
when everybody is just trying to push it out somehow, and
then for that point, especially, I really want to bring one important point here for our viewers is that when you go to someone, even that person is CPA, but if it's a single person office and CPA, obviously that person is going to work 18, 20 hours a day to get all the taxes done and everything. So chances are, yes, something that he's going to overlook unintentionally, he's going to miss something and whatnot. What I'm trying to say is that SAI CPA services, where they have 20, 22 CPAs on hand to assist you with your personal taxes or corporate taxes, and there is a layer of individuals who's going to check on the return. If one person does it, the other person expert is going to check it, another third person is going to check it, and finally it's going to come on Ajay's desk, and Ajay is going to review it. So chances are there is not going to be anything that missed out, there's not going to be any mistake, and on top of that your tax is going to be done right. But that can be really, really helpful when you file taxes early.
You're 100% right, Sanjeevji. We in the company have 4 pair of eyes that every single tax return has to go through. When you're doing thousands of tax returns and millions of numbers, everything starts jumbling together.
Yes,
everything
yes.
starts sort of coming together. It doesn't matter how smart you are. When people have so many things to do in short amount of time, mistakes can happen. And that's why a good accounting practice, good CPA practice will have multiple people doing the entry, checking the entry, doing the review, and discussing the situation with the client, showing the screen by screen information to the client before the taxes are filed. And you will have more time, even from the professionals, if you're filing it sooner as opposed to going there in the last minute.
Okay, so that is interesting. Now let's look in a scenario. All right, that's put in a general perspective here that why you should be filing taxes early. But let's say if there are students who are working to pay to help them to pay college fees and everything, and when they are filing taxes, right? Can you share some of the examples of students' tax returns? What is it really required, and how does it help them to file taxes early?
Absolutely. So, of course, students are on a budget. Most students will get a refund back, because if you are here on F1 visa, if you have not been here long enough, you typically file 1040 NR. So in those cases, you typically avoid state filing. And when you're expecting refund, it's better for you to file it sooner as opposed to later. If you can get the money now, why do you want to wait for getting the money? Why do you want to get in the long line if you have a short line by filing it sooner? At the same time, if you're planning to go for FAFSA, or if your parents are planning to apply for FAFSA, the student loan, the FAFSA company, the system will ask them to submit their tax return. Now in these days, instead of asking for the most recent tax return, they're asking for the previous year's tax return in a lot of cases, only because a lot of people have not filed the taxes. But if you can file your taxes sooner, it wouldn't be a bad idea. You can provide the most recent information for the FAFSA application. It will only help you go a long way in order for you to get the loan or the refund.
Okay. All right, that's a good point, and that really helps, because sometimes you have to get some documents, I guess, from college.
Absolutely.
and then from federal government,
tuition,
1098
tuition statement is what's typically needed. But I mean, all these things goes together, and it becomes troublesome when you are calling the school system. And think about it, all these schools have thousands of students like you. If everybody called on April 14th, April 15th for their tuition statement, the school wouldn't be able to handle it. Okay. And that's why a lot of people miss the tuition statement, miss the rebate, miss the credit, and end up filing late.
Okay. So now, and then quickly in 2 minutes, I want to cover this topic. It just came to my mind. Let's picture a family of 4, husband, wife, and 2 children. Okay. Husband and wife, they both are working. Children are young, so they are saving money in a 501c3 and all the other things. They both have 401ks. They are trying to put as much money possible for their children's college fund and put it together. They have 401k also. They have, let's say, other stock invested portfolio and everything, right? Just quickly tell us that what kind of documents they should be putting it together. Let's say they haven't filed a tax return yet and they're waiting for April 15th or beginning of April. Quickly, let's help out with our viewers to see what kind of documents they should start putting it together without missing one.
Absolutely. Great question, Sanjeevji. So first of all, a W-2 from the job. If you own any businesses, you should get a K-1 from the business. If you have some side income, consulting income, there may be a 1099 that's coming for that consulting income. If you do have a 1099, please try to put a table as what were the expenses around the 1099, meaning in order to earn that side income, what did you have to spend? You probably had to travel, buy some supply, buy some uniform, buy some phone, internet, utilities, iPad, whatever you had to do, whatever you had to spend to earn that income, that's also necessary. At the same time, you will probably have the dividend document. Sanjeevji was mentioning 529 plan, 401k plan. 401k typically does not have a separate document. 401k shows up on the W-2. 529, we don't really need a confirmation, just your contribution confirmation will be sufficient. But then if you have the stock transactions, you probably have a 1099 DIV that you can go to the investment bank's website. In the year-end tax document, you should be able to download something. If you have a rental property, then see how much rent came in, how much was the property tax, how much was the mortgage interest. And just remember, the property tax limit that everybody is talking about, $10,000 SALT limit, is only for the primary home. When it comes to the rental property, there is no such limit. You can claim as much interest as you paid. You can claim whatever property tax you paid. So all these documents, and the ideal thing, the best thing, look at your last year's taxes, see what documents you had, and at least try to put all those documents together or bring all those documents to the accountant's attention and let the accountant decide what makes sense.
Or maybe between the last year and this year, whatever other investment you made or something.
Absolutely.
So your suggestions were very helpful, and that's coming from SAI CPA Services. We're going to take a short break. When we come back, we're going to start with SAI CPA Services, what services they offer, and we're going to continue with our topic. So please stay with us.
Did you know what's the average refund for the year 2024? Well, the average refund for a family is $3,145 in America, which is 6% higher than the prior year. A lot of people owe taxes, But on an average, the average refund is $3,145 per family.
Very nice. Interesting to know. Can I do my did you know version?
Absolutely, please.
I can do that? All right. Did you know that SAI CPA services located in the state of New Jersey with multiple locations can assist you professionally with your tax returns, personal or corporate tax returns, because they have on their hand very trained, educated, knowledgeable CPAs. Not too many firms would have their, multiple CPAs. They have over 20 CPAs and then the other staff members who go through each and every single tax return from start to finish. And then they make sure your taxes are done right. Refund or paying up money, that's a different thing, but taxes to do right. And plus they can advise you where should you be investing money before the year end, so that way you can save taxes on your tax return. So keep that in the mind, and you can give them a call at 908-380-6876 or visit saicpaservices.com. And in today's topic, we're discussing that there are benefits of filing taxes earlier. Sooner is better. They always say that. So that's exactly what we are discussing. Now we're going to go into, let's say if someone has a foreign income, someone lives in the US but they have a foreign income, they have a business in outside the USA. What should they do to file their tax return, and that too filing it earlier?
Absolutely. Great question, Sanjeevji. So a lot of people in US have connections back home. I mean, we are all first generation. Second generation, we still have properties at home back in India, rental properties, CDs, fixed deposits. So if you have that type of situation, then first question you ask, do you file the Indian taxes? If you're filing the taxes in India, that tax deadline is very different. India works at fiscal year. Their year starts from 1st April, ends on March 31st. So for them, the tax deadline is June end, not April 15th that we have here. So by April 15th, you wouldn't know what taxes you paid, what income you had. You wouldn't have that complete tax return reconciliation from the Indian CA, from the Indian accountant while you are here. So in those cases, especially if you are filing the Indian tax return, it may make sense for you to file the extension. But please remember, extension is for filing the taxes, not for making the tax payment. If you expect to owe more than $1,000, you're expected to pay the taxes with the extension filing before April 15th, not at the time of filing the actual tax return. Take an example, Sanjeevji. Let's say if somebody sold a property in India. Now they're expecting capital gain because they had purchased it or inherited it. Now they sold it. Now with all these capital gains coming in, you don't know how much the capital gains are, because you're filing taxes in India, and then whatever taxes you're paying to the Indian government, you want to claim those taxes as an offset over here in US. But you wouldn't know the actual amount until the Indian taxes are filed.
Correct.
Then you estimate the amount, file the extension in the US, pay some extra money to the IRS, to the state, so you don't owe any penalties while you're filing the taxes.
Okay. Interesting. So these are the things that people should really keep in mind when there is a foreign income involved in it. All right. So now we discussed the benefits of filing taxes sooner and how it can really help. And also for the future, once you file a tax return, chances are that your tax return, chances for that return to get audited is a little less than filing your tax return at the last moment, because people do tend to miss or forget something really important in that kind. Now moving on to these things, filing taxes sooner for personal is better, but at the same time for corporation is also better?
Absolutely, the same principle applies. We just have to remember the corporation is a general word. There are S corporation and there are C corporation. And sometimes people refer a corporation even to the LLCs. So if you have a flow-through entity, S corporation or LLC, that tax deadline was March 15th. If you filed an extension for your flow-through entity, if you filed an extension for your S corporation or the LLC, you cannot file your personal taxes until that business tax is filed first. The business is a flow-through entity. A K1 document similar to W2 will come from the business tax return, which gets included on your personal tax return. So if your business, a flow-through entity, an LLC or S Corp is not filed yet, you cannot file your personal taxes. So ask the accountant who filed the extension, ask for a timeline, and if the timeline that they're giving you is after April 15th, then please go ahead, file the extension for your personal taxes so you don't have any delays over there.
Okay, good point. So now here's a scenario for corporate taxes, right? If the owner realizes that they don't have the receipts required to file the tax return, and they don't have enough documents, they are still waiting for it, what should they do in that situation?
Well, the rule is all the receipts needs to be contemporaneous in nature. You have to have the receipts at the time of filing. You cannot really say, I spent the money, if the need be, I can get the receipt. That's not how it's supposed to work. But if you don't have all the paperwork, try to estimate as best as you can, file the extension, pay whatever you owe, and then you have some time, you have enough time to find the receipts, find the proper bank statements, do the proper reconciliation, decide how much income you had, what K1 you have, what other documents you have for your personal filing, and then do the right filing. In the worst case scenario, let's say you tried all the best possible option. You called the IRS, you called your employer, you called everybody in the world, and you don't have the W-2. You don't have a document that you need. Then IRS advises that you file based on the best estimate. Whatever best estimate you have, use the best estimate.
Or use a last pay stub.
You can use the last pay stub, except certain taxes may not be there.
Yes.
So,
but at least when they say use
absolutely,
the best estimate.
Absolutely. So
Right.
use the best estimate. You base it based on last pay stub or some sort of calculation, so you can clearly show this is my best estimate and this is how I calculated the best estimate. So nobody is saying that you made up the numbers.
Okay. Now, making up the numbers or making the things and whatnot, that leads me to a question. What if someone has unexpected life events in their life, and then it has to do with the taxes also?
Absolutely. A lot of time things changes. Fortunately, unfortunately, things happen. Let's say, for example, if a taxpayer happens to pass away, the spouse still has the right to file married filing jointly in the year of passing away. For next 2 years, as long as there is a dependent, she can file qualified spouse, which gives the same benefit as the married filing joint. So just be cognizant about it. There will be things that you cannot control. Do the best. Find an accountant, find somebody who can help you, guide you through this difficult time, through this. And it could be good also, Sanjeevji. Sometimes people inherit money. I mean, I have a lot of clients, oh, my dad in India, my mom in India, and this is what happened. She passed away and I have a property now suddenly. What do I do? Well, now you have F-bar filing obligation, FATCA filing obligation. You have to report if the value of the property is above certain amount, more than $150,000, give or take 1 crore rupees. You have to report that property. There is no taxes around it. You don't really pay any taxes at the time of inheritance, but you have to report it to the government. So tomorrow, when you sell this property, and you want to bring this money back here, you can say, remember, I told you for the last 3 years, I have been telling you I have this property, I inherited this property. So disclosing, reporting requirement is there as opposed to making the tax payment. You make the tax payment when you sell the property,
Right.
as opposed to when you inherit the property.
Okay, all right. So that's unexpected life events, and there are that's obviously a family events or whatnot. Let's say talk about unexpected event. Someone has been putting money into traditional IRA, 401k, right, which is not taxable. But then during the year, when they switch, for some reason they decide to switch to Roth IRA, which is a taxable. What kind of advice would you give it to them?
So a lot of people do that. So the right time to have this rollover from a pre-tax account to a post-tax account, so you have a mix of pre-tax and post-tax at the time of retirement, is the year when you are not making a lot of money. So the US system is a ladder-based system, meaning lower money you make, you have 10% taxes, and the highest tax rate could be 37%. So if you have consistently, if you are making $500,000 and you are in, say, 32% tax bracket, then in 1 year you left the job and you want to take a step back and relax and not work. That year you have $50,000 of income. that year where you have much lesser income is the year when you want to consider a rollover from a pre-tax account to a post-tax account. So you got the benefit at 37%, and in the rollover year, you will end up paying 10%, 12% taxes, and have the money, the post-tax money, being converted into a post-tax account.
All right. So okay. So filing taxes sooner for your personal taxes as well as corporate taxes. That's what we discussed in this show. As we have 2 minutes to go into it now, let's talk about late payment penalties.
Absolutely. So late payment penalties and late filing penalties can be very high. It depends on how much you owe, and if the late payment, the total payments are under 80%, if the total payments that you made are under 80% of the total tax liability that you should have paid, then you have underpayment penalties. It also depends on where the income is coming from. If you have the income coming from K1, a flow-through, S Corporation LLC, then you have to consider making quarterly estimated tax payment. So if you have a large liability, it's not just April 15th. You are expected to make that payment throughout the year on a quarterly basis. So estimated tax payments are due on April 15th, June 15th, September 15th, and January 15th. Especially for the small business owners, people who own flow-through LLC, flow-through S Corporation, it's very important to make these 4 quarterly estimated tax payments so they don't end up paying large interest and penalties.
Okay, interesting. Now here's one question which happens, I guess, to many people out there. Taxpayer knows that he or she would be paying tax, would be paying to IRS because they paid under taxes. They paid taxes under during the year. Right before April 15th, if taxpayer realizes after looking at the tax return that tax liability is much higher than what they had planned. For example, let's say if it's a $2,000 and they planned for $1,000 and they don't have extra money, what do they do?
Well, they can always get a payment plan. So IRS allows up to 6 years for a payment plan. If the liability is under $50,000, you can get an automatic payment plan through the IRS website, through the softwares. If the liability is over 50,000, then you have to go through a different system, and you may be required to file 433-D or 433-F for direct debit or for showing the financial assets you have, but you always have an option. Please remember, the tax liability is a function of taxable income. The fact that you have large tax liability only means you made large amount of money. You had large income. That's the only reason you have large tax liability, because you were not paying enough upfront. But again, you have 6 years for the installment plan, and IRS, these people at IRS are very, very kind. They have a job to do. They are not against you. They don't want to be coming behind you. You do the right thing and you'll be okay.
Because they could be one of them also, right?
Absolutely.
They are the taxpayers
Absolutely.
too.
I'm glad you asked. All IRS employees are required to file their taxes on time and keep it very clean. You cannot be working with IRS if your tax situation is not 100% clean.
Correct, exactly. All right, viewers, as we are getting closer to the end of the show, it's time for a quote of the day from Mr. Ajay.
Great, Sanjeevji. So only 2 things are certain in life. It's death and taxes we can help you with.
All right. Yes, it's very true. And the other true thing is, yes, there is one thing certain that during the tax season, there will be a tax talk show right here on ITV. So until we meet again next week, same place, same time, I am Sanjeev Pandya, wishing you all happy and tax-free days ahead. And Ajay, thank you so very much for your time and for your guidance and knowledge. Do check out next week's episode for more on taxes. Once again, the show is brought to you by SAI CPA Services. Visit their website, saicpaservices.com. Thank you.
Thank you.